So let's mark it up. Let's just say, oh wait, let me just reverse price. Okay, let's just say we have this OB here. So when is the time when you look for Wyckoff? That's a very good question. That is where people get screwed a lot. Where do you look for Wyckoff? So basically, if you see this part here, there's two tones, two colors. Basically, this is the 50% of the order block. Now, according to the studies or the concept that most orders lie on the 50% of that order block. What I mean is price could heavily push on the 50%, then go higher, since there's mostly all of the orders here. So this is a sell move before the buy, down move before the up move. So basically they're selling heavily. So multiple sells here, then few sells here. So that's what I mean by the 50%. So let's mark it up again. So here's the crazy thing about Wyckoff. So Wyckoff, you'll see it in everywhere, right? Remember, I marked up these huge zones. There's also tiny zones of schematics there. So usually what I do is in my rules, I can only take 2 losing trades at the same setup. What I mean is, let's say price tap, breaks of structure. What do you guys see? I see Wyckoff there, a Wyckoff schematic. Because if you understood order block, sometimes, or have seen order block, sometimes price goes down, touches the open, basically sniper entry, and then go push higher. Or sometimes price goes a little bit here, either in this part or in the 50%, then push higher. So what I do, so I won't miss out on the trade or that good run, is if I see a tiny schematic on this zone, this large zone, tiny schematic, if you see this breaks of structure here, then I would enter there. So it broke structure, so technically this is a valid Wyckoff now. We look for an order block here, or either this larger order block here, since that's just what, 5 pips for your stop loss, then we enter there. Then what I mean is, my rule is I can only lose 2 times in a row on the same trade setup. Is if price went lower and stopped me out, then maybe it's forming a larger schematic. What I mean by a larger schematic, it can look bigger. Wait, let me erase this. It can be a little more bigger zone than this schematic, or a bigger schematic compared to this one. So this could be the selling climax, this could be the ST, then we have some impulsive moves, then the spring, then breaks of structure here, then that's a valid Wyckoff. Then I look for an OB there, then I try to enter from here, then go higher. Then if I lose again, let me erase this. Then if I'll just mark this up. Then if I lose again, let's say the price is this blue one, this blue arrow. If I lose again, it went lower. So possibly this could be another larger schematic. So this could be the SC, this could be an SC selling climax, ST and B, because it went lower than the selling climax. Then this could be the spring, then price could do this, then break this structure point, then technically that's a valid Wyckoff. Then let's say it worked out, there's an OB here, you enter there, then price shot up to the moon. So basically, for my rules, if I lose 2 times in a row in the same setup, I wouldn't enter anymore. But sometimes this works out. You can lose 2 times, then on the 3rd try, you can enter from this OB here, then price touched it. So that's the crazy thing about Wyckoff. It happens everywhere. I'll give you guys a certain example which I took. Let's replay it here. I think most of the people here saw it. I enter on this one. there was an OB here, so we have an OB there. Then we went to the lower time frame to look for Wyckoff confirmations. So what do I see? So I was looking for, okay, here's the thing, you have to balance out. Either you wait for a larger schematic to happen. So let's say this could be the buying climax, the AR, the UT, the UTAD, then the breaks of structure, then you enter in the retest. So if you wait for the larger structure, basically it means you'll have a higher stop loss. So let's say we have an OB here, this red zone. That's an order block. We enter in that retest. Basically that's 9 pips for your stop. But breaks of structure here. But this could be a more, let's say, a more respectable one, or a respectable size, because sometimes these tiny zones. So what we did, we looked for a Wyckoff schematic. We saw a tiny Wyckoff schematic here, which was basically just like this. Breaks of structure, break of structure. Then we entered on the retest. Then we dropped it down. Let's say price is still here. So let's say we entered here, a sell here. We entered a sell here. Then price is still here. Let's say price went up, then hit your stop loss. Then what you would do as a trader, you zoom out and rethink. Oh, what's happening? Oh, price shot up or it hit my stop because it could possibly go higher because it wants to make this bigger schematic instead of this tiny one, which was here. When you zoom out, oh, this looks like another schematic. This could be the buying climax, the UT, and the UTAD. Okay, if I lost on this tiny one, which is a very good RR, I'll just look to re-enter in this one, which could work. So we wait for a break of structure. It broke structure. Then we look for an OB here, then enter in that. It's lesser RR, but you could have the opportunity, or you'll have the chance to not miss this huge move down, which right now currently went lower. So it's probably a 1 to 8 RR currently now, if we measure this. So, and I can't really answer that. I mean, I can't really answer it well or explain it well because the experience plays a huge role when looking for Wyckoff or using Wyckoff as confirmation. Because maybe a bunch of you guys don't really use Wyckoff as confirmation or use other things as confirmation. You might not be comfortable looking in the seconds time frame, looking for that tiny schematic. Oh yeah, I forgot to show it. It was here. I think it was the 15-second. Yeah, I think we entered, we looked for, was it this one? Yeah, we looked at this one. This is the 15-second. So if you look at this is what I mean, the snowflake rule. You don't need to complicate Wyckoff. What do I see? A BC, sign of weakness, or an AR, then the UT. This is a schematic 2. Then we see a break of structure there. Wait, here. So it broke structure, then it's a valid Wyckoff. We enter in the retest. Wait, break of structure here. We enter in the retest. Then the retest is we look for an OB. Then we had this larger OB. I think it was this one. This larger OB. We had this marked up, which created equal highs. I think we entered on this part. Then we almost got stopped out, but I had my stop a little bit higher since price could mitigate all of the order block. So you want your stop a little bit higher, so you'll have a little bit of leeway in case price wants to mitigate all of that, all of the order block. So this is what I mean. Tiny schematic, we looked at that, we entered at that, we're happy. So if it broke that, let's say price broke this higher, say this, then I might look at it. So let's say I took a loss. So let's say price shot up to this point. So basically we took a loss in here because we had our stop here. Then price went up. Then what I would do is zoom out and I would say, oh, this could be a larger schematic. What do I see? Buying climax, ST. This could be another ST since it's creating equal highs. Then let's say price went up, so this could be the UT or the UTAD. Then I would wait for that break of structure from this AR or sign of weakness. We wait for that validation. As soon as price breaks that low, now it's a valid Wyckoff. Then we look again for OBs to enter. On the retest, then we bring it lower. So basically, it also, yeah, that's why I can say you need experience or to backtest this, because I can't really say or tell you what it looks like, or basically sometimes there's different patterns all the time on Wyckoff, so I can't tell you every single pattern or every single thing that price could do, because price could, let's reverse it to here. Say price went up to this, let's imagine this is an OB, this highlighted zone. Price could do a tiny schematic here and drop lower. Price could do a tiny schematic here, drop lower, goes higher, stop you out, then goes lower. So basically there's another Wyckoff here, that's a Wyckoff there. Then price could also do a tiny schematic, break of structure, you enter in the retest, price goes lower, stops you out, breaks again, then you see this larger schematic, then you try to enter in this OB, then price breaks it again, hits your stop loss, then you zoom out and you look, oh, this is a larger schematic, breaks buying climax, the UT, the UTAD, so we're waiting for these breaks of structure at these points. Then you wait, then you enter again on this OB here, then you get stopped out again, then you zoom out, oh, this is another Wyckoff schematic, so this is another UTAD, then you wait for that break of structure, yeah, then break of structure, then you enter again. Then it also depends on how large your zone is. So what I mean how large your zone is, so obviously we're in the 15 second, I forgot. Let's just go in the 1 minute. Let's say in the 1 minute, let's say you have a very tiny POI here. Is your POI? Obviously, you look for a schematic that is reasonable or fits for that size. So if this is a 1 minute POI or order block, you don't look for a 15-minute schematic. You don't look for, let's see, a huge schematic like this, because it doesn't fit that size. So what you would do, I'll just give you guys an example. I can't really explain it, or I can't really show you, because that's what I say, you need to backtest or test this so you'll understand. So to fit this size, I would look for a schematic this big. So that's Wyckoff there, then you enter, it broke structure. So tiny, wait, let me zoom in a little bit. So tiny, you enter, then you enter there. Then another size, valid size for me is this one. Oh wait, this one, valid size. It's another valid size, maybe this one, that's a valid size. Wyckoff, you see Wyckoff there. It's another valid size. This one, Wyckoff here. BC, UT, we expecting a UTAD. Oh, it's another UTAD here. Then this is the UTAD. Then breaks of structure. Then we wait for the retest. So it also depends on the POI you have. So if you have this tiny POI, obviously you want that tiny schematic too. Because if you look for a huge schematic, your RR is messed up, or your RR could be significantly lower. Since if you look for this, let's say oh, BC, let's say this is a UT, since let's say it's a schematic one, then break of structure here, then we look for an OB here. Let's say the OB is this big. Then we set a sell limit here. Then let's target this point. That's a 3-to-1. Now, if you compare it to look for a tiny Wyckoff that fits your tiny zone. So tiny zone, maybe, wait, let's mark it up like this. UTAD or the UT breaks the structure. You look for a retest here on the order blocks here. Then you go lower. Say you marked up tiny order block here. You had your stop here, which is, I believe, 0.8 pips. Oh, that's 1.2 pips. Then you target this low here. Then basically that's a way better RR. Instead of 3-to-1, that is then a 30-to-1 RR. So that's why I always mention backtest, 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 because I can't explain it to you. Well, because many things could happen for the schematic.